All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today on this beautiful Tuesday. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes. Let's make sure that we participate and engage. Um, And as always, I want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for the outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. And if everybody can hear me okay, drop me one in the chat and we will get things underway. All right, beautiful, beautiful. All right, so we'll hop over to trading economics, take a look at things there, get an update on where things are with all the chaos over the weekend, um, and then we'll see what the charts have to say after all of the back and forth and potentially even a little bit of manipulation. All right, so let's get it done. And forgive me if you hear any background noise. I am still traveling um, in a different location right now. So if you hear a little bit of background noise, that is what you have. All right. Um, so, boom. All right. So tons of back and forth, right? We had U.S. enter this war with Israel against Iran. You had um, Iran signal that they were going to respond um, with a light attack on U.S. bases that occurred. Then you had Donald Trump come back and say that there's a ceasefire agreement on the table. Um, and before the weekend is over, you see the charts start. I mean, you see the market start to respond to his words regarding said ceasefire. Um, so with that, you had oil prices, right? As of today, they paired some of the losses, but are still down nearly 3% after plunging as much as 6% earlier in the session, trading below a level seen on June 12th. The decline followed President Trump's announcement of a ceasefire between Israel and Iran, both which both sides have appeared to accept the deal. The news eased concerns over potential oil supply disruptions. However, the truce remains fragile as Israel has already accused Iran of violating the agreement. Right. Um, so this is going to be an interesting ongoing situation, but you also have this paired with that tax bill that is coming due by the end of this month, beginning of next month, right? July 4th, which they're headed toward that agreement. So you got a lot of smoke and mirrors happening. You got a lot of talking going on. So we'll see how things shake out over the week. Um, but that's where we currently stand, and the markets are responding to that. Okay. You got gold pulling back. Gold fell to a 33.25 on Tuesday, a 2 week low, as markets assess the sustainability of the ceasefire between Iran and Israel. Tehran and Tel Aviv had agreed to a momentary ceasefire after exchanging strikes since last week, but reports of fresh missile launches and um, strike orders raise skepticism on the validity of the truce and support concerns that a conflict will soon resume. All right. So that's where that stands. This was after exchange of controlled strikes between Iran and the U.S., minimized collateral damage, and preluded a period of apparent de escalation. reducing the appeal for gold safety and preventing the metal from retesting record highs at 3,500 from late April. In the meantime, key FOMC members noted that they are not opposed to a rate cut in the Fed's upcoming July meeting amid signs of wavering labor market and dissatisfaction in consumer prices, right? You had that start to creep in after the last Fed meeting, and members starting to say they would support a rate cut in July. So it's definitely a conversation to pay attention to because we could see a rate cut that surprises the market. It'll be interesting to see where that takes us. But what you have is an interesting situation where you have tariffs that haven't hit market yet, but you have now a labor market that is starting to turn. You have a lot of large organizations, Meta, Microsoft, that are set to lay off thousands of workers, and other large employers are also moving in that trend. Some because of cost cutting measures, but others because of how they've implemented AI into their workspace, and they're able to cut down some of the workforce because of it, right? Um, so you have that happening. At the same time, you have this war in the background, which I don't think is over, right? And so generally during war times, you see money being printed, right? So we could see a rate cut, money get printed to fund said war, and you'll see the stock market rise along with this tax bill that comes in, that really throws the market in a hyperdrive into this euphoric state, right? So you got a lot of pieces that are working in the background that are going to be interesting as things start to come due around 4th of July and into the beginning of August after this recess. All right. Um, so that's gold. Then we have stocks 50 jumped 1.7%, and the stock 600 as 1.1% on Tuesday after Trump announces a ceasefire between Israel and Iran. Um, we read that, right? Iran already violating agreement, which we'll take the words with a grain of salt. Uh, Warning of new. So Israel accused Iran, right, of violating said agreement, and Israel warned of new missile attacks from Iran and vowing to retaliate, right? So that's where this thing is teetering still. Meanwhile, investors are turning their attention to NATO summit kicking off today at the Hague, potentially mispronounced that, where leaders are expected to address security priorities in light of the recent global tensions. Most sectors traded in the green with strong gains among major companies, including SAP, LVMH, Hermes, ASML, Novo Nordisk. In contrast, energy stocks underperformed: Shell, Total Energies, BP, Repsol among the laggards. All right, so you got energy stocks come down, obviously with the tensions easing out a little bit. Um, but then you had some of your consumer goods and tech spaces pushing up a little bit. All right. So that is there. You also have um, some meetings coming up in China where they're going to be discussing, well, they just discuss a lot of things, but this meeting is let me see if this article is still up here. Um, we got China. It's not showing here right now, but let's do this. That meeting is called. If my screen will load here. That meeting is called Politburo meetings, um, and is held in Beijing. And these meetings, what they are is um, it's composed of 25 top ranking members, including Xi Jinping and Li King. It's China's top decision-making body on matters of economic policy, national security, party governance, and geopolitical strategy. All right, that meeting is coming up, and things that they talk about: macroeconomic planning, uh, property market and debt management, tech regulation and innovation policy, internal stability and security, foreign policy coordination, U.S., Taiwan, BRICS, Belt and Road. So some of the things that the market is looking for from this meeting is hints on economic stimulus, right? Shift in the regulatory tone, and then policy priorities, right? But the big piece there is that economic stimulus that could continue to move the Chinese market um, in in a positive direction for us, those that have some investments in China already, some of the ETFs that we've looked at, right? So that is something else that is on the horizon. And that meeting takes place beginning of June, or beginning of July. All right, so that's something that markets are also watching from a Chinese perspective. Okay, um, over to the calendar, we have Bank of Japan core CPI came in as expected at 2.5%, just above the previous reading. So that CPI is starting to still ticking up a little bit there in Japan. Later on today, you have CPI coming out of Canada. You have President Lagarde speaking at 9 a.m. You have FOMC member Hammock and Ramsden speaking. I'm sorry, FOMC member Hammock and member speaking out of Great Britain at 9:15 and 9:35. Then you have Governor Bailey speaking, and you have Fed Chair Powell testifying uh, in front of Congress. All right, so you have those things happening there. You also have more central bank speakers coming in later on today. You have Bank of Japan meeting minutes here, summary of opinions. And then at 9:30, you got CPI out of Australia. All right. So some of these conversations when it comes to the central bank speakers definitely could impact the market, especially if they continue to talk about this potential rate cut that more are starting to favor. So we'll keep our eyes there as well. Okay. Um, Benny, good morning, bro.
Ryan, good morning. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself?
Oh man, doing pretty good. Always glad to be here.
Yes, sir. Talk to me, man. What's top of mind for you?
Oh man, you covered it all, man. But the main thing is just the big, beautiful bill, man. That's it.
Yes.
That's it.
Yes.
I I noticed that the with the with the war situation, um, the markets barely budged, right? Didn't react to that.
Didn't
You know,
react much, man.
didn't react to it a ton. So my focus is just, keep the main thing the main thing. Really keeping an eye on this bill, and to see if it passes right by July 4th or whatnot. So or before July 4th. So that's the main thing, man. It's a lot going on around the world, but I just domestically that's the focus right now is what's going to happen with this bill.
Yeah. Yeah. Do you have any updates on where they are? I know they've been really, really pushing to make some progress there. You
Yeah,
got
that
any updates on it?
that's it, man. I not nothing really. Everything has you know, kind of been mum since the war situation, but just trying to get it passed, you know, before July 4th. And then there's some reports that, the Senate version, could it possibly be, worse in regards to, spending and things like that. So just still trying to gather the details on it. But my main thing is just the if it's gonna get passed by July 4th. That's
Yeah,
that's the main thing. I don't expect uh there's a lot of, you know, Republicans out here jawboning to their, constituents that hey, they're not gonna support it in this current state. Uh but at the end of the day, it's gonna pass. And it's gonna be record breaking as far as I think exploding the deficit and as far as the size of the tax break moving forward. So
yeah.
that's it. I don't see that changing, a ton. So I don't know, man. Just waiting to see. I think I think the market will rally on it, but it'll be as we find out more details of that final version, it'll be interesting on what the Fed thinks.
Right.
As a result, with two projected cuts. But like I say, it'll be interesting to see that final version to see what they're thinking and whether or not that two cuts remains the idea moving forward after the bill passes. So that's the two things I'm looking at: the bill passing and then the Fed's reaction and the plan moving forward.
I'm with you on that, man.
Yep.
I'm with you on that. Cool beans. Appreciate you, bro.
Hey, no doubt.
All right. So let's hop over to the charts and we'll take a look, see uh where things are, right? So the dollar, you know, closing out last week, we held this low and we started moving to the upside where now we've turned over and we're pressing back down, right? We're headed back towards that $97 area. We got the stochastic still net cells on there. So we want to continue to watch this level, see if we ever break that, and then continue that move to the downside, getting to that matching D extension at 95, 534, right? Off of that 50% retracement here. So the DXY, the dollar index, headed to the downside. We'll see if we're finally able to break that area. This is the zone that we have mapped out for multiple time frames as price moves to the downside overall. Okay, so dollar moving down. Historically, when you have the dollar weakening, you have the stock market gaining, which we have that inverse relationship happening right now. Um, we'll take a look at the S&P 500 and NASDAQ in a second, but that's what we have on the DXY, right? So just coming down to the four, see that a little bit more clearly here. And what you had as you move down through the time frames is we'll go down to the 1 hour time frame to see this, but you had an 80-20 here, right? You had a shallow retracement price pushed up into the zone, and then you had the bottom fall out, right? You had the bottom fall out, boom, and we're still headed to the downside. We'll likely take out that A there, okay? Likely take out that A. Where that translates is to that dollar yen, right? And that dollar yen on the 1 hour, I'm not sure if anybody traded this yesterday, but you had an 80-20 shallow retracement pushed up into that 118, 127 zone. And then you see the bottom just fell out, right? So headed to the downside now, starting to consolidate a little bit. We'll see if there's a dollar rally at any point. However, this was a beautiful scenario here, a beautiful breakdown to the downside. Coming back to the daily, just look at it from a broader perspective. Overall, right, our trend is to the downside. We got this crown pattern overall happening here, right? Deep crown. And we're still trying to make our way to the downside. We got this consolidation that's happening in this range here, okay? But that push to the upside, that 80-20 on the lower time frame, gave us an 8-6 retracement, right? So in the smaller wave here, the matching extension is 149.40. Okay, so looking at the dollar yen and continue moving to the downside here. We come down to the four. Zoom out here. Make sure I don't have anything extra. Okay. So right? We got smaller waves happening here. I'm going to run a fib off of this high. Yeah, okay. It gets choppy. Take that out for now. Okay. This is our harmonic fib here off of that crown pattern. We got a 786 retracement. So that matching extension here is 133 overall. Okay. So overall, we're looking to the downside, just waiting to see how that plays out and where the fundamentals align to make that move happen. Okay. So we got this move down. We're at that 618 retracement level on the four. We got a stochastic on the buy zone. We'll see if things turn around and move back to the upside or not. Okay. So we'll continue to monitor this at this level. But back to that 1 hour, that 80-20 is beautiful. Now we'll watch to see where things go from here and how the market responds. Okay. Any questions on the dollar yen?
No, sir.
All right, cool deal. All right. So let's take a look at this S&P 500. That's to Benny's point. The market did not budge. And as of right now, is rallying to the upside on the lower time frames. But we'll come back to the daily, and you see here, we're stuck in this range, right? We're stuck in this range right here. So right now we're pushing to the upside, ceasefire, all of those things in the background. Um, and you see the market trying to rally as of yesterday. We'll see where it opens today, likely to give us a little tick higher here. Okay. I am watching this 6,132 level, right? Previous highs, it'll put us in the 80-20 space. But if we break that and then retest and that level holds, that rally comes, right? This is our weekly D extension here. So I'm watching to see how this plays out. Now, if the slim chance that they don't pass this bill, slim chance that that does not happen. Very slim. But if they don't, potential for the market to pull back a little bit. We'll see how that goes during that session break if that occurs. But I'm in the same boat as Benny. I do believe that they're going to pass this bill, um, and I think the market is gonna rally like crazy because of it. So that's on the daily though, right? We're sitting right around this B boundary area, looking to see what happens here. Okay. And then we will slow things accordingly. On the four, we got an 80-20. We peaked up into that 118 level right here. And now we're looking to see what happens, right? Do we push further into that zone and continue to rise, right? Or do we push up and then turn over and give a retracement? Okay. But we do have an 80-20 here on the four that we're monitoring along with the fundamentals. Okay. Down on your 1 hour here, boom. You also have that same 80-20 similar to that four where you just kicked up to that 118 level. And you see the market pushing to the upside here at the end of this consolidation. And we'll continue to monitor things to see how the market opens and how we move through this week heading into tax bill preparation. Okay. So that's where we are on the S&P 500.
I don't
I
think,
think
Ryan,
it's
the
not
price is
moving.
moving on the indices. I don't know why in Smart Trader. It's just been stuck there since yes.
Uh, yeah, so that's 1 o'clock. So we'll look to see how the market opens today. No, that's not 1 o'clock. I'm sorry. 12, that's 2 o'clock. Okay. Yeah, we'll look to see what's going on there. Interesting. Okay. Appreciate that heads up there, done that. Huh. Okay. We'll definitely keep my eyes on that. Let me take a look at another chart here. SP. SP 500. Well, it's not moving right now, but it's in about the same range. Pushed a little bit higher. Okay, it is pushing a little bit higher. We'll see how the market opens here to see if it comes back on and adjusts. But it has pushed a little bit higher up into 6076, right? So it's getting closer to the 6132 level. Okay, appreciate the heads up, Bennett. Um, so that's on the 4 and that's on the 1. So we'll watch these indices to see where they go and where the fundamentals align for either a potential retracement or the top to blow off and for this market to rally like crazy. Okay. So that's S&P 500, NASDAQ. We
Yeah,
got a question?
I've got it at like 60.25. The price.
60.25 current
Yeah,
price?
on my trading view.
Okay. So it is stuck a little bit. Okay.
Yeah, the XP like 60.25, 16.
Okay. Appreciate that. Yeah, we'll monitor to see. Let's see what's going on with smart trader and see if, like I said, see if it picks back up when the market opens today.
Yep.
Um, it's Nasdaq, similar story.
Yeah.
So this one is on Sunday. That's what you're saying here. Yep, Sunday didn't move. Okay. Well, this has us Monday, same time. All right. So they got some sort of glitch happening here. Okay. No problem. We'll look here. Price is a little higher on these. We'll take that note. I think we're still in similar areas when it comes to the overall thought and idea. Sitting near this 118, 127 zone and these highs, right? 22, 269. And so still looking to see here if we break that level or not. Okay, let's see. NASDAQ. So that's what we'll continue to watch. And again, we'll see where the if things update when the market opens as far as price goes, but looking at it to be around these highs here. Okay. Coming down to the 4, right? Still range bound in that area. Okay. We'll see if we're able to break above and continue to rise. Okay. But on the 4, you have this 80-20 here. And again, right, looking to see if the fundamentals align with that retracement. And then on the 1, same story. Okay. So watching the 80-20, watching these highs as well to see if they hold or if there's a strong break of them and a retest and a continuation. Okay. So those are the if then statements. If price stays below those resistance levels, right, we'll look for a retracement. If price breaks those levels, strong bullish action with a retest, we'll look for those to continue moving long, especially when we get some of those fundamental details in place. Okay. Questions on those two indices?
Yeah, you're like 22.091 on the NAS.
22.091. Okay.
Yeah, back and
Yeah,
forth, something like
it's a little
that.
bit higher, somewhere around
Yeah,
in this previous high range here.
yeah, they got to get it together.
Yeah, yeah, for
It's
sure.
disappointing.
Definitely is. Definitely is. We're sitting around these highs. Okay, appreciate that. All right, so we'll monitor um, as those go. Okay, I want to take a look at a few stocks. Tesla is moving as we anticipated. Right, we come back to the daily time frame here, and we got that nice trend line break, and we moved to the upside. Came into a level of resistance, right? And we got a nice retracement here. Okay. I got these sub fibs running to the upside. Um, if I'm not mistaken, we took out all of those. Yep. So we took out those coming down, right? And now we're kind of bouncing back and forth here. Okay. Um, that was the fib to the downside. We also took that out. Okay. So this is our active fib sequence here. And on the higher time frame, I mapped out some of the fibs as well. And so we have a weekly B extension sitting right here at 364.30, okay, which we're headed toward, right? We have this beautiful trend line break. We also broke out of the cloud, had all of our cloud confirmations. We came back, retested the cloud with an 8-6 retracement. And then you see the reversal to the upside here, okay? So we got a weekly B extension at 364.30, right? Based off this capital fib on the daily, 8-6 retracement. That's just above that weekly B extension at 369.94, right? So in the short term, looking at this range for price to head to, then we'll get a reset and a pullback, and then we'll look for a continuation. Okay. So, but price is headed to where we wanted it to go, right? And overall, we've talked about this quite a bit, but we see over the long term getting to around over the 3 to 5 year period, getting to around $2,500 a share. All right. And so we're in a position now where we can really start to build long-term investment positions on this, right? Be it in your personal account, in your Darwin account, right? In both of those, really building those long-term positions on 3 to 5 years as things continue to accelerate and as we continue to identify new opportunities on these pullbacks and continuations, we continue to grow those accounts. All right. So coming down to the four, you see that pull back a little bit more clearly there. We had an 80-20, beautiful setup, shallow retracement, 118 and 127 zone, and you see the breakdown, right? In that breakdown, you got an 8-6 retracement. So in the 4 hour, your matching extension is right in line with that weekly B extension. All right, so you got alignment of the weekly and the 4 hour right there at that in that zone, and that daily B extension is just above. Okay, so highly likely we get to that level and then we get a retracement. Okay, and that kind of puts us into being a bit range bound for a short period of time here. Okay, and so we'll look for a breakout in one direction or the other at the end of all of that. Okay, so watching that there. Watching that there as price continues to move to the upside on Tesla. Okay, coming down to your 1 hour here, you got a fresh AB boundary. Okay, within that range, you got a fresh AB boundary. So, do we get a nice retracement here? This could set us up beautifully, right, for a breakout to the upside if we get a nice retracement early here. Okay. Um, if we get a nice retracement back down into that 618786 range, right, that could be the perfect setup for price to break out, retest, and continue moving long, right, and not give us that prolonged range here potentially. Okay, so let's watch price this week. Um, and see if we get a nice deep retracement to come here. Okay. Because that'd be a great setup for a move along with the passage of that tax bill. Because you know Elon's going to be able to take advantage of that as well. Free money. All right. So that's Tesla. We're looking for a retracement, low price, be able to add to our positions and continue to run this thing to the upside.
Brian, I
But
wanted to share. I don't know if you
yes,
guys
ma'am.
knew on TradingView that you can get their financials if you right click on the the symbol.
In TradingView,
Yeah. If we go,
uh,
I think it's products. Under products, you get your charts in. Super charts.
thank you.
So, um,
All right, talk to me.
you right click on in the in the box in your watch list.
On the watch list.
Yeah,
Right
on
here.
the December. Right click on it. And then it
Okay.
says financials at the bottom. And it gives you everything, your statement.
Ah, beautiful. Appreciate that, Donette.
Yeah, I got it from somebody earlier today. I was like, how do you get that?
Awesome. It's a nice breakdown of the
Mm-hmm.
financials in TradingView, financial health. That's awesome. That's awesome. So as we're researching these stocks and ETFs, we can come into TradingView and take a look at the details of that stock um, and how they're performing financially. That's good info. Awesome. Thank you so much. Thank you so much. We'll definitely start going through these as well. Um, it gives us the financial information that we're looking for as we start putting together our portfolios. All right. Great work, Donette. Appreciate you on that.
Yeah, and you got the statements, you got the stats, the dividends, earnings, everything. It's like, wow.
That's awesome. That's awesome. Um, yeah, so you can definitely take a look at that there. Um, Stock Circle also has a lot of these details as well, right? Um, and it looks like they bring in some of those trading view charts. And so we can get a combination of both of those and take a look at all the financials here and who's holding this stock, right? And so as we're looking at those ideas, as far as portfolios go, we can really start to combine different levels of information, right? To build the case, right? To build the summary, to build the thesis for the investment, right? You build a thesis for the investment. You have a projection of where you see price going based on that thesis. Now you have an investment opportunity that you can continue to build on, right? Um, so great detail on that. We appreciate that. Um, we'll continue putting those pieces in place and doing those deep dives on different stocks and bringing in those financials so that we can also educate on what those financials mean and how they impact the stocks and the market overall, and how we can then really start to put together longer term projections uh, from an investor's perspective, right? It really, really important as we continue to evolve. All right. Yes, each one teach one. Each one teach one. All right. Questions on that? On Tesla overall? Nope. All right, cool. Um, PLTR. Um, Looking at this one because not only is it on the AI side, but it's also on the defense side, right? It's also on the defense side. And so with the Department of Defense and the contracts that it has with the US government, right? We're going to see this continue to move to the upside in a major way, right? And we've been watching this one since it's been way down here in the single digit range. All right. And we've seen the rise in this stock. So right now, from a daily time frame perspective, we're coming into an 80-20 here. Stochastic in the sell zone. We'll see what happens. We just broke this daily level. All right. So the question is, does this daily level hold or not? If it holds, right, similar to the rest, we're going to see this really start to accelerate, right? Because it's going to that tax bill is really going to put owners in a position of cash to utilize, right? And if that's combined with a sooner than later rate cut by the Fed, you're going to see some crazy action in some of these stocks, I believe, right? And in the market overall. Not saying that they're going to go hire more people, right? But from a cash infusion perspective, from a bonus perspective, maybe even stock buybacks, right? You're going to see these stocks just run crazily to the upside because of the cash flow and how they're going to start moving cash and utilizing it in other ways to increase the value of the company, right? That will ultimately increase their bottom line, make them more valuable, and transfer wealth. Because that's what this game is really about: is transferring wealth from one hand to another, from one group to another, and that's the cycle that we're in, right? And so that's where we are, right? So we're headed to the upside on Palantir. Okay. So that's where we are. We'll see if we get things to align for an 80-20. This may be one that does not play out, but we'll watch and see. Okay. So coming back here to the 4, we'll map these fibs out. Here, boom. Okay. 80-20 on the 4 as well. Yeah, right. Didn't get to that 382. So shallow retracement. We're from that 118 to 127 zone. On the 4, we have a stochastic in the buy zone. Okay, so we'll watch closely from a fundamental perspective, and see where we land. But keep your eyes on the 80-20 if you get fundamentally things to align and a nice bearish candle break, we could be in for move to the downside. But we need everything to align for us, right? All of our different points of confirmation to give us that move. So we'll keep watching there. Down on your 1. Let's see. Go down. Let's see. We're good there. Boom. Bunch of back and forth. All right, so we're going to come to this low here. Boom. We already got a 382 push here, double bottom at the 382 level, and the push to the upside. So we'll look for a D extension to be hit here at some point at 146.19 on the 1 hour, right? So we're headed to the D extension there. So we could see it push through that 118, 127 zone on the 4 and potentially even on the daily as price continues to move to the upside here. All right, so we'll continue to watch that. Let's Palantir. Any questions on this one? No? All right, cool deal. Taiwan Semiconductors. I'm gonna do a breakdown on this one next week, but I want to go through and mark up this chart so that we have it, marked up. I know Benny has talked about this one quite a bit in the past, as we've looked at the semiconductor industry and where things are and where things are going. But just wanted to come back to it, and I didn't have it marked up, so we're going to go through and do that right now. All right, so put in our support levels on the monthly. I'm going to place that there prematurely, but looking at this moving to the upside, that'll give us that low, right? Evening star, boom. Or morning star, sorry, boom. All right, moving to the upside there. So that's on the monthly time frame. So we'll look at that to continue moving to the upside. We got a level of resistance right here that we're getting ready to come into. So let's go down to the weekly. All right, support level there. Whoops, bring that down. I'm not gonna need all of these levels, but boom, boom. All right, so that's where we are. From a weekly time frame perspective, we have stochastic in the sell zone here. I'm going to run a fib here on the weekly just to see where we stand before we move forward. So I got taken out. All right. So look at that. 8-6 retracement stayed inside that A boundary, pushing to the upside, right? The extension just above that high at 226, right? So we'll put that in. Boom. Noted as a weekly D extension. Okay, so we'll come down to the daily. Boom. Fresh AB boundary on the daily. Okay. Those support levels already in, supported by the weekly and monthly. Okay. Daily support level here. One there as well. All right. Boom. So that's where we're on the daily. Weekly, monthly, daily in. We got pushing to a D extension on the weekly. We got a fresh AB boundary on the daily. Okay. So retracement and continuation is what we look for. Got stochastic in the buy zone. So that could potentially even call for a reversal here and push into that 118, 127 zone. All right. So we'll watch. We'll watch there. Right. Fresh AB boundary. Okay. Coming down to the 4. Look at the fibs on the 4. Um, let's see here. Took out that A there. Okay. So we're moving back and forth here, and also took out that high there. All right. So we'll run that fib there. You got an 80-20 there. 80-20, right? So we got that fresh AB boundary on the daily time frame. All right. This could set us up for that retracement to a low price. So let's watch this here. Let's move down. And then these semiconductor stocks I'm long-term bullish on unless something crazy happens. But let's watch this here. 80-20 on the 4 on SMC. I'm sorry, TSM. Look for a move down, giving us low price, retesting previous resistance, right? Retesting previous resistance. Also, got crown action here. Take out the high. Foresee the right tip. Boom. Right? See how it all comes together there? So, looking for that there. All right. 80-20 on TSM. Down to the 1. Let's look at it from that perspective. Same story. This one's already started to break down on the 1, pushing to that 118 level, and then you see the move there. Okay. So let's watch this on the 4-hour, right? And see if we get this nice move down. That'll give us a low price on the daily as well. Okay. Taiwan Semiconductor. Questions? No? Benny, you got your eyes on anything, bro? Before we wrap it up?
Oh man, not really. Still sitting in those positions. You know, waiting to see what happens.
Yep.
That's it.
Yep. Cool deal.
That's it. Just still sitting in my main positions, being patient, right? Looking to continue to make gains for the second half of the year. I mean, they're all up right now. You know, the market's recovered well. You know, so my spot positions, I've got one spot position that's still down a bit, but the rest are up. You know, my QQQ is up. You know, 2,400 bucks. EFA, you know, ETF moves are up. So just continue to let them ride out. Even my TLT position is improving. You know, the 20-year
Mm.
Treasury bond is improving. So that was down a bit, but it's even made some gains. So just continue to hold those positions over the long term and not getting caught. You know, trying to jump in and out of trades as much. You know, even my SCHD is back in a positive. So um,
Awesome.
just yeah, it's just paying off. Just sitting the arc position that I took. You know, is up now just slightly. Um, but it's all in the positive. So just continue to let it ride out. I think some of these positions are, they're sitting at some highs right now. I know with the bill, I think overall because of the, making those 2017 tax cuts permanent, um, I think that's going to be huge. But I'm also not being passive, and I do realize that there is an issue with um, the deficit, right? There's a lot of concerns there, with this bill, with the deficit. So as I see some of the prices, with some of our indices and things like that are sitting pretty high, it wouldn't surprise me to see another correction. I think ultimately it's gonna move bullish, but I can see another correction occurring, especially with the concerns over the debt. I think the Senate version of the bill increases the debt limit. I think it was like 5 to 5 trillion, and the House version was 4 trillion. Yeah, so it would be a pretty sizable increase, in the debt limit, when we really haven't shown any constraints in regards to controlling spending. So I know
Yeah,
that's an issue. The markets do have a concern about, the spending problem that we have, and the continual increase in the debt. Um, so just like I say, all eyes are on this bill and trying to figure out how the market is going to react as we continue to get more developments, in regards to the Senate version of the bill. So that's why I'm so focused on it.
I dig that. I dig that, and I'm curious to see kind of where they net out because you have a narrative out there that the impact to the deficit won't be as much as they're trying to say. They're trying to shift that narrative on that to kind of subdue those, I'll call them emotions for lack of better terms, or those perspectives of it ballooning that deficit to a level that's unsustainable. Um, so I'm curious on how that plays out too.
Yeah, for sure. And I just think like, those tried and true consistent, stocks, the indices, the S&P and things like that, just being good with the risk management, very good with your risk management, and I just been holding my positions, and so far, it's been paying off. It's just a conservative, safe play. It's just to get into, like I say, to some good ETFs that are well balanced. Um, you know, trading the indices and holding those positions and being conservative and not being over leveraged during these times. That's what's really been paying off. So I haven't been super active as far as brand new trades and brand new positions as much as I've been just letting the ones that I have play out.
Yes, sir. Yes, sir. I am with you on that, bro. I'm with you on that, certainly. Team, any questions before we wrap things up for the day?
Nope.
When you say how to enter a trade on lower time frame, Deb, meaning um, utilizing your additional confirmations? Gotcha. Yep, definitely can. So, a good example of this would be that dollar yen. Okay, dollar yen. And so, when you say lower time frame, what are you talking about? Like 30-minute, 15-minute, or because lower time frame for me is a 1 hour. 30-minute, 15-minute. Okay, cool. So, um, this dollar yen, right? If you were to look at this as price pushed into this 118, 127 zone, right? So back yesterday morning, as price was pushing to the upside, you see you got a shallow retracement. You see price pushed into your 118, 127 zone. Okay. So what you can do is you can start running your trend lines. Okay? Run your trend lines to the upside. Okay. And you're tracking this move long, right? And this inner trend line you take down to your lower time frame. So now as you come down, whoops, forgot. So now as you come down to your 30-minute time frame, boom, you got your trend lines drawn. You see where price is. You see how it's moving. So here on the 30-minute, and the process is the same regardless of the time frame that you're on, right? And utilizing your confirmation. So it's all the same, just a different time frame. Okay. So if you're using trend lines as your additional confirmation, you map your trend lines to the upside, like so, right? And you look for a trend line break. You see price pushed up, you got your swing, price started to shift, right? You got two candles to the left that are lower than the highest point there. You got one candle breaks the trend line, and you got a second candle to close. So now you have a swing high, right? Boom. With that second candle closing, gives you your swing high. It's a little big. Okay. Boom. Swing high formed. You also, in that, you got a trend line break. So at the close of that second candle of the swing high is where you'd enter your trade because your confirmations have been met. You got a swing high that formed. You have a trend line break, bearish candle close, right? And it closed before you got your swing high, which is totally fine, right? You still wait for that second candle to close to confirm that swing high. And at the close of that candle, so at 9 o'clock, you'd have entered that trade for that move to the downside in your 80-20. Okay. So the process is the same regardless of if you're on a higher time frame, the lower time frame. Whatever confirmation you use, that's what you utilize. Okay. If you're trading cloud breaks, right, and you're looking for a cloud break, all right, beautiful. So we would have waited, right? You got your swing high to form here, right? You got your trend line break, but we haven't broken the cloud yet. So we would have waited on this one, right? Yep. Price moved to the downside quite a bit, but we would have waited for the cloud break. Okay. We would have waited till we got the break of the cloud and we got the additional confirmations. We got the Kumo twist there, right? Your TK crossover there, your lagging span broke through price, right? And we got price to break through the cloud and push down. So we'd have entered this trade here for that move further down, right? At the close of that candle, you would have entered your trade, and then your profit would have come here. Boom. Right? So you got a trend line break, entry, move to the downside. You got a cloud break, same thing, right? Your key points, Kumo twist, TK crossover, lagging span below price. Boom. Break out of the cloud, 92 pips to the downside. Okay. And so the process, like I said, is the same when you're using your additional confirmations on the higher time frame. Same process on the lower time frame. It does not change. Okay. It does not change. You're just looking at smaller intervals in which price is being tracked. Okay. So on the 15-minute, process is the same. Okay. You got your trend lines to the upside. Your swing high would have come here. Oops. Your swing high is here. Okay. Boom. Now, trend line break. We'll pull that out. We know we got our swing high, 2 candles to the left, 2 candles to the right. Boom. Now wait for a trend line break. Trend line break occurs. Your entry would have come here at the close of this bearish candle. You enter the trade to the downside. There's your profit. Okay. Off of an entry right here in that candle. Boom. Okay. Waiting on a cloud break. Okay. Cool. No problem. Right. You got your Kumo twist. You got your TK crossover. Got your lagging span breaking through price. You got your cloud break here. You enter your trade on the open of that candle for that move to the downside. You follow me on those? 4-hour chart with a 15-minute entry. Okay, no problem. 4-hour chart. Boom. Okay. You got a fresh AB boundary here. So if you're trading AB boundaries, cool, no problem. Right? You're looking for a swing high to form. Boom. 1 candle, 2 candles. Okay. So that's what you're looking for. Swing high. So it's all based on what your rules are. Okay. We gave you the blueprint. Now, which ones are you using on each time frame? Right? Are you trading B boundaries? Are you trading 80/20s? Okay. But B boundary, you got to swing high to form. Boom. Want to come down to the 15-minute time frame. Looking for an entry. Same process, right? You got a fresh AB boundary on the 4-hour time frame. Okay, take these out. Oops. So that AB boundary on the 4-hour confirmed here. At the close of this candle, boom, right? That confirmed your AB boundary on the 4-hour. So if that's what you're looking for, and you come down to the 4-hour time frame, until you come down to the 15-minute time frame, right? Price is already broken your trend line, it's broken your cloud, right? And your entry would have come in this area. Okay. What's your thought process and your reasoning on going from the 4-hour to the 15-minute? Deb, you still there? Can you hear me?
Yeah, I can still hear you.
Okay. Have you thought through that, Deb, on what the reasoning is for you choosing that that change from the 4-hour to the 15 for an entry? What are you looking for in going from that, right? And get trying different entries. What are you looking for specifically though? And if you don't know, that's okay too, right? Just remember the process, right, is the same. If you're looking for, if you're going to wait for a B boundary to form on the 4-hour time frame, and then drop down to the 15, look for an entry, you have to also understand that, right? There's going to be a major difference in that move, okay? Right? Prices move to the downside there, so you're looking to enter here. And if you're looking to enter on the 15-minute time frame, what's the criteria for your entry at that level, right? Because going from the 4 hour to the 15-minute, you already have a swing, you already have a trend line break, you already have a cloud break in most cases because prices moved quite a bit from that 4 hour time frame. Okay. So just some things to think about is what will your entry criteria be when you get down to this 15-minute time frame, right? Because prices already started to move in that direction. So you gotta be thoughtful on what that criteria is for you and how you can be consistent in making that jump. They should going down three time frames, right? Um, so that you can be consistent in that as you're testing, right? And that's a question to ask yourself as you're testing, right? Can I be consistent in making this transition? And what does that look like for me, right? What are those specific rules? What are the specific criteria that when I get to this 15-minute time frame that I'm using to take that entry? Okay. Um, and then see what you get. Test it, see what you get. Test it, see what you get. And are you able to be consistent in that? Because the biggest piece is being consistent in the process. Okay. So there's some things to think about as you're going through your testing. What do you need help with? What are you struggling with? Are you looking for a pinpoint, precise, perfect entry? Is that what you're trying to get to limit your drawdown? Um, are you are you most people when they say they struggle with their entries, most times that's what they're trying to do. I want the perfect entry for a trade. Um, and the perfect entry is when your rules are met, right? And so, what rules do you have in place for entering trades, right? So, that then comes back to that question. What rules do you have in place to enter trades? And are you doing that consistently, right? It's not about identifying the perfect point that price moves, price changes direction. It's about what do your rules say about entering a trade, okay? And that comes back to when I get a trend line break on this time frame, close of the candle, I enter the trade. When I get a cloud break on this time frame with Kumo twist, TK crossover, lagging span below price, the trade, right? And so being specific about what your rules for entry are is key. And then going back and being consistent in your process, right? But also understanding that that's not going to give you an exact price point. That's not what we're looking for. When people tell you, "Oh, I got this perfect entry and no drawdown," it's very, very, very hard to time the market. Very few people do that consistently well. Okay. People get lucky, but people don't do it consistently well. And so the thing is having specific rules in place that you follow consistently when it comes to taking entries on trades, right? When price pushes into my sweet spot, right? When price pushes into my sweet spot, i.e. 118 and 127 zone after a shallow retracement, I look for a trend line break. Boom, right? Price pushed into the 118, 127 zone. It kept going up, which is fine. I got my swing high to form. I got my trend line break. Now I enter my trade, right? Very, very specific, right? Or when price pushes into the 118, 127 zone after a shallow retracement, I enter the trade and I place my stop outside the D extension. right? When the price pushes into the zone, close the candle, I take the trade. I take the trade, right? That's my entry, and I place my stop loss outside the D extension. Boom. It's very specific. We're not trying to time the market. We're being consistent in our process. Every time price pushes into the 118, 127 zone after a shallow retracement, I'm entering the trade. I enter the trade, place my stop loss outside the D extension, right? I got my stop loss set, and boom, I got my TP1 set. Boom, right? So if you don't have specific rules for your entry, you got to be thoughtful in that. And what are you using, right? So going back to the training and looking at, right, what are those additional points of confirmation? Trend line break, cloud break, or when price gets into the zone. Okay. But you got to be specific in your rules in order to have a consistent process. And again, we're not looking for exact price points, right? We're looking for the rules to be met, right? Criteria for a quote unquote perfect trade is your rules are met. So you got to ask yourself, what are my rules? Right? And document those and test those and be consistent in those. That make sense? Okay. So you're going off of a trend line break. Beautiful, right? You're looking for a trend line break. Okay. Now, if you're going from the 4 hour to the 15-minute, again, you got to be thoughtful about, okay, can I be consistent with that going from that 4 hour to that 15-minute time frame? Because we saw, right, that trend line break occurs here, your entry comes in down here, right? So can you be consistent in getting a trend line break with that difference in the time frame? Question for the answer, right? When you think about it and think through it and do your testing. Okay. Questions on any of that? Does that make sense? You're welcome. You're welcome. Benny, I miss anything there? Team, did I miss anything there?
I would ask to practice in the demo, um, because what I did was to get familiar with my entries, was going demo and practice things that will probably work for my interest.
Appreciate that. Appreciate that. All right. So what Joy is saying is open up a demo account, right? And whatever your criteria are, trend line break on whatever time. All right, beautiful. Now let's test it. All right, let's take demo trades, right, in the live market to say, okay, does this work? Right? Can I be consistent in this process? Just a simple yes or no answer, right? And if it's yes, beautiful, keep going. If it's no, okay, why not? And what do I need to change? What do I need to look at differently so that I can be consistent? That's it, right? And it's test, see, right? You test, you get results. Do they move you in the direction that you desire to go? Yes or no? No emotion attached to it, nothing like that. Yes or no? If it doesn't, okay, beautiful, right? What do I need to do to move in my direction, right? Maybe I need to change time frames. Okay, what does that time frame change look like? I need to go up to the 1 hour time frame and look for that trend line break. All right, beautiful. What does that look like? Let's test it. Let's test it, see if I can be consistent with it.
Oh, and one more
Right?
thing.
Mm-hmm.
Deb, I don't take all 80/20s, but how Ryan got his chart up here, I will have my up and down fibs just to see the measurements, if that helps.
I wouldn't go that far just yet, Joy.
Oh, my bad.
Um,
My bad.
and I'm just saying that
Yeah.
because we want to get comfortable with the capital fibs first.
My bad. I ain't no educator. That's why you make the big bucks.
No, y'all good. Y'all good. As you get more comfortable, you can add in, right, sub fibs and things like that. But getting comfortable first with capital fib, primary entry, what does that look like, right? And what are the rules surrounding that makes that entry up? Okay, cool.
I would add
Any
looking
other
at your
questions?
structure. Look at structure also. Sometimes price comes back on your fib right at the structure. Wait for your swing low to form, and then enter.
Yep. Past support resistance, right? Are you coming into an area of support or resistance, right? That swing high forming, right? Past resistance becoming future support, right? Past areas. You have resistance here. You came into that same area here. Boom, cool. You created that swing high, giving you that confirmation. Then you got that trend line break, right? 5 candle formation. 2 to the left, 2 to the right. Awesome. All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for this pre-New York session. You all have a phenomenal, phenomenal Tuesday. Peace.
Thank you.
Very welcome.